Hi everyone, I'm Nick, this is Mark. I've been a business or corporate banker for over 20 years. Two problems have been absolutely present pain points throughout my career and every banker's career. The first, I have a portfolio that I know is deteriorating in quality, and the reason that's happening is that the credit rating tool that we rate customers have not performed well. The second problem is that all the investment I seem to be doing is to appease regulatory compliance, and I can't really use it to improve the quality of my portfolio, understand what the portfolio is going to look in the future, and help my customers. These problems are really fundamental. They have customer satisfaction at the core, capital efficiency, and profitability for a bank. So I felt so strongly about those problems that I left the bank and started the riskframework.com with Mark to solve those problems. The problem that we're going to demonstrate to you today is going to be about showing you how quickly we can deploy models into a system that the banker can use immediately to rate customers and not wait the typical 12 to 18 months scenario. This is absolutely crucial because you know you've got risks, but you're not managing them, and you know you've got risks now. So Mark is going to show you how we can contract a 12-month deployment into minutes. Take it away, Mark.
As Nick said, he's in a situation where he's just discovered that one of his portfolios is not working well. So, in order to reduce that time, we've come up with a technology we call model injection, which takes that time from 6 months to 18 months, that sort of time frame, down to a matter of actually minutes, potentially. Let me show you how that works. I've just logged into my commercial credit loan portfolio here. I'm a banker, and I'm looking at the rating system for one of my customers here to rate that customer's loan performance. So I've got all of the information that the system has tracked, and when I want to rate that customer, it will calculate a rating. We've got a 0.85% probability of default, gives us a grade of about 4. Now, Nick's research has told me that that's not accurate. If we're offering loans and if we're doing business based on those kinds of ratings, the bank's going to get into trouble. The problem is I'm stuck with the system for another year because it's going to take IT another year to actually fix this for me. Well, not anymore. Let's log out of this system. I'm going to go home and leave it to my RFM friends to fix this. We've got a system here which allows us to deploy changes to the model, and in this case, what Nick's team has figured out is that we're not taking enough information into account about the quality of the management of the company that we're lending to. As a result, the loans are being calculated with the wrong PD. Instead of spending 6 months working on an IT project, all I have to do is drag this into my deployment window and save the results, publish them out to the server, so we'll publish them out there, save the results, and next time when I log into the system, so it's the next day now, I've come home from work, done my thing, and I'm logging in, and it'll bring up my customer list again, and here's my favorite customer again. Let's see what they're rated at. Now this time, I've got a new field on my form. I didn't have to wait 12 months for IT to do that. I could click a button, and the model injection technology pushes the logic updates and the user interface updates right out to all of the systems that require that, as you saw, literally with the push of a button. And now when I rate this customer, instead of a probability of what we had before, it's gone up to 0.98%, and we can see he's a much riskier customer than we thought. So, instead of 12 months, that took about a minute and a half. So, Nick? So
we've accelerated the deployment of the models, and now we can actually go and see a customer, see them. Oh, what's that?
Uh-oh, something's happened. We have an alert here. What's gone wrong here?
No, that's good, Mark. No, that's good. It's not good, but the alert is that artificial intelligence agents have been trawling the portfolio, and they've been looking at utilizations of loans. They've been looking at unutilized loans across our bank, and they've targeted a couple of areas where it seems that there's unseasonal high utilization. So basically, customers are utilizing these facilities much more than they should, and that's a red light for us. That's something that I always want to be able to identify and manage on my portfolio. This is a kind of a stress test, but it's not a stress test that regulators do, which is very, very high. I want to know exactly what happens to my portfolio. Can that do any more, Mark?
Yeah, we can drill into that and see what other information the system is able to tell us about it.
Oh, that's fantastic. So what you're showing me there, what Mark is showing me there is that it's not only identified that there's a problem, it's actually found in what areas, what industries the problem is occurring. And it's showing me that in the past, in-season utilization has a particular baseline, and these loans are really, really crossing the threshold. Now I've got somewhere where I can actually drill down, understand my portfolio, and improve the way that I manage it. The way that I would do that is I need to get some senior bankers and credit officers and quants, and they need to work together. That process takes 2 to 3 months because they need to go to and froing with PowerPoint presentations, stripping over meeting rooms, what have you. This can send emails to everybody that's impacted, all the bankers that have got the particular portfolios in place, and they can be available to meet so that they can sort it out. What I'd like to be able to do is to set up a situation room. Set up a situation room where they can actually do live stress testing, and everybody that understands the portfolio, from the analytic people to the frontline bankers, to be able to do that. Can that do that, Mark?
Consider it done. We've got a stress testing project that's been set up based on exactly the parameters that you want. It's calculated the parameters that are relevant to this stress test, and in no time at all, it'll produce the stress parameters and allow us to look at what happens to the various portfolios.
That's fantastic. So basically what it's done there is showing me how the portfolio will evolve. I can have conversations with my customers that are really at risk, and I can really target them to help them improve their business. I can also figure out if I need more capital and speak with finance and do it in a timely way, not wait when everybody's falling over and tapping the capital markets and eroding shareholder value. That's what our technology can do. It can be live. You can create the situation room,